Why is the Walt Disney Company, an institution that defines the American identity, quietly liquidating its sovereignty in March 2026? While the public is distracted by the recent CEO succession in Burbank, a silent, coordinated asset strip is happening behind the closed doors of Wall Street. This isn't a creative slump, it's a strategic exit. As Josh D'Amaro officially takes the helm from Bob Iger this week, the shadow architects at BlackRock and Vanguard are moving the pieces for a total structural pivot. Disney is no longer an entertainment company. It is a $197 billion holding tank of real estate and intellectual property that is currently being drained into private, air-gapped jurisdictions. If you own Disney stock in your 401k or Roth IRA, you aren't just an investor. You're the exit liquidity for the 0.1%.
Most analysts see Disney's record-breaking $10 billion quarterly revenue from parks and cruises as a sign of health. They are wrong. In the world of quiet wealth, record revenue is the perfect cover for a shielding maneuver. Under the newly enacted One Big Beautiful Bill Act, OBBBA, the estate tax exemption has been permanently locked at $15 million per person. But there's a catch. The OBBBA also introduced new caps on itemized deductions for those in the 37% tax bracket. By dumping billions into massive physical expansions, like the new Villains Land in Orlando and 5 new cruise ships, Disney is converting liquid, taxable cash into qualified production property. They are leveraging the 100% first-year depreciation rules to erase their tax liability before the 2027 fiscal cliff slams shut.
But the real story isn't the taxes, it's the control. As of February 2026, BlackRock's Aladdin AI has fully integrated the Preqin private market stack. This means the algorithm managing $21 trillion, more than the US GDP, now has a native, real-time, whole portfolio view of Disney's private assets. Aladdin isn't just tracking stock prices, it's simulating the liquidation of Disney's 25,000 acres of Florida land. They are treating the most magical place on Earth as a dataset in a Monte Carlo simulation, deciding which pieces to keep and which to ghost into private equity funds where public oversight vanishes. On March 18, 2026, Josh D'Amaro officially succeeded Bob Iger. The media calls it a new era of creativity. In reality, D'Amaro was chosen because he ran the Experiences division, the only part of Disney that produces hard, physical cash flow. While Disney's entertainment and sports divisions saw profits plunge by 23% this quarter due to soaring rights fees and avatar marketing costs, D'Amaro's parks hit record sales. He isn't there to make movies, he's there to manage the yield of the physical assets, while the media side is slowly cannibalized by AI-driven automation.
While you wait in line at the Magic Kingdom, Disney is quietly shifting its capital sovereignty to international hubs. The 2026 expansion into Abu Dhabi and the world of Frozen in Paris aren't just for global reach, they are sovereign enclaves. By diversifying their physical footprint into jurisdictions with favorable wealth protection laws, Disney is ensuring their IP remains protected even if the U.S. economy hits a systemic reset in 2027. They are building a borderless empire while the American middle class remains anchored to a devaluing currency. Disney's 2026 pivot to AI-enhanced guest personalization is the final piece of the trap. Every MagicBand Plus click, every Disney Plus stream, and every park entry is being fed into a unified data architecture. Through the Aladdin Preqin integration, the elite now have manager-level due diligence on the consumer behavior of 150 million Americans. They know your net worth, your travel patterns, and your psychological triggers before you even book a flight. This isn't marketing, it's predictive harvesting. They are using your nostalgia to extract the last remaining retail capital before the 2027 restructuring begins.
To extract the last remaining retail capital before the 2027 restructuring begins.
How do the 0.1% profit from a dying brand? Through the Wyoming Dynasty Trust. While the public fights over franchise fatigue, the underlying value of Star Wars, Marvel, and Pixar is being moved into private trusts that stay tax-exempt for 1,000 years. By licensing these characters to private market entities, which are then monitored by Aladdin, the elite ensure that the wealth generated by these icons never enters the public tax pool. They are creating a millennium of invisible wealth, while the public Disney becomes a shell of itself. Imagine a world where the House of Mouse is no longer a public company. The quiet chatter on the 13th floor of the Burbank headquarters suggests a private equity buyout as the final stage of the Ghost Protocol. By taking Disney private, the elite can complete the asset strip in total darkness. No SEC filings, no public earnings calls, just a silent $200 billion entity operating behind a curtain of discretion. This is the ultimate goal of the invisible empire: total control with zero accountability.
Why is March 2026 the turning point? Because the OBBBA indexing and the 2027 fiscal cliff are converging. The top 37% tax bracket is about to face new deduction floors and capped SALT benefits. The elite know that the visible economy is about to become a harvest ground. By moving Disney's core value into international experiences and private IP trusts now, they are ensuring that when the 2027 crash hits, their assets will be safely tucked away in the shadows. They aren't selling Disney to the public, they are selling the public on the idea that Disney still belongs to them. You have a choice. You can continue to view these brands as childhood favorites, or you can see them for what they are: tactical instruments of wealth preservation for the 0.1%. The Disney exit is a masterclass in how to dismantle an empire without the masses ever realizing it's gone. It is the definition of quiet wealth, having nothing to prove while owning everything that matters. While the masses argue about politics, the shadow architects are arguing about allocation ratios and jurisdictional arbitrage. The dismantling of Disney is a warning for every major American institution. The titans of the 20th century are being cannibalized by the elite of the 21st. The Ghost Protocol is live, and the exit doors are closing. Authenticate your presence in the new economy by subscribing and activating the notification bell. Discretion is our standard. Save this disclosure for your records. The era of the public empire is over, and you will need to reference these specific financial signals as the 2027 window begins to close. The simulation is ending. The reality is just beginning.